most valuable asset in the state of California is changing. With some major insurance companies ceasing to issue policies in the state, it's raised some concerns among homeowners about availability of coverage and its impact on existing premiums. Some of the effects of this so far this year include, number one, reduced competition among insurance companies. So basic supply and demand here. With fewer insurance companies in California, competition in the market decreases. This might lead to higher premiums for homeowners because insurers have less incentive to offer competitive rates. Number two, limited coverage options. Homeowners might find themselves with fewer options for coverage, which could result in having to settle for policies with less favorable terms or higher premiums. And number three is increased risk assessment. Insurance companies might reassess their risk exposure in California due to factors like wildfires, earthquakes, and other natural disasters. This could lead to higher premiums or stricter eligibility criteria for homeowners that are seeking coverage, like a new buyer. And lastly, number four is potential for policy non-renewals. Homeowners who currently hold policy might face non-renewal for those policies. This situation could leave them scrambling to find alternative coverage, potentially at higher costs. So if you've had an offer accepted on a home and you haven't done so already, you need to shop for home insurance. I advise all my buyers to do it before you go under contract or on the day that you do, because you got to be especially diligent in shopping for coverage of homes, especially in our area where there's high fire zones, special flood zones. You can find that in the NHD report. The more proactive you are, the less surprises later on. If you need a trusted insurance broker or are just curious about your current home's insurability and how these changes might affect you, send me a DM, let's connect, and I'll see you next week for more real estate tips.